So we are now going to talk about renting is now cheaper than owning in all of America's largest metros. There's a qualifier. Hold on. There's a qualifier because it's the top 50 metros. The article title says all America's largest metros.
Yeah.
It's measured by the top 50. This is coming in from ZEROHEDGE, which broadly covers a lot of economic stuff. We have a combination of higher mortgage rates and sky-high housing prices has made it cheaper to rent than to own a home in all of America's largest metropolitan areas, according to a new report by Realtor.com. 50 metro areas in the U.S. found that while it was already cheaper to rent than buy in 90% of metros in 2023, it is now 100% of metros. And that is the first time it's happened since Realtor.com began tracking this metric.
Yeah, I saw that. That's pretty crazy.
That sucks.
So, I just had a conversation with clients yesterday, and they're renting here in San Diego, and between what they're looking to either rent or buy, their mortgage payment here in this instance was lower than what they were going to rent.
Wow.
So, they were looking at certain apartments, and depending what area here in San Diego, Chula Vista area, they were looking, I believe, $3,800 to $4,100 for a 2 to 3 bedroom apartment. Now, we kind of ran the numbers because they wanted to actually move into a mobile home. Ooh, that was not an option after they saw the land lease. So then I said, look into a small apartment, see what that looks like. We ran the numbers, and it was, $200 to $300 cheaper to buy than to rent, at least for that, that example here in San Diego.
Yeah, got it.
So.
I guess.
Well, that's like an exception. That's not the norm.
That's not
what we see here. I mean, that's like an exception for your case because even the other people you're qualifying, like owning is substantially still more expensive than even the renting that they're coming from.
Yeah, because you got to consider the maintenance. You got to consider light, electricity. Sometimes apartments include, light, trash, or yard work. Now when you own a home, you have to have, lawn. You have to have water, electricity, cable.
Yeah.
If there's solar, a lot of times they're just, hey, take over the solar lease. You will have that better than, paying for electricity, which is pretty expensive. Well, here in California, they changed that rule. So starting July is going to be a different story. It's going to be based off your income, which is pretty nuts.
Yeah.
Us Californians, we just keep getting these rules and regulations. It just keeps getting screwed up. But
no comment.
Different topic there. But, here's the thing.
Emphasis on the com.
If you ask anybody that's owned or investors, owning is the way to go. I know right now those numbers are not making sense, but the time in the market, eventually it will. Especially when we just saw in the previous article that, it's appreciation is growing by 5 to 6% if you do that math. And it's like when you're renting and you move out, you got nothing.
Right.
You lost on that,
Yeah.
But when you're owning, you earn that appreciation. And then since you're in a 30-year fix, you're also paying down principal.
Yeah.
Then it goes further. All the interest and the property taxes that you're paying for owning that property is also a tax write-off.
Yeah.
So now you could actually take a little more home. So it's going to, sometimes right now it's going to be difficult. It'll counterbalance what they're saying, but the longevity is where you reap the reward.
Yeah, this to me comes down to cost versus value. So, when you're renting, you're going to have a cost with a zero value, other than having a roof over your head. I'm not going to, undermine that. So you're going to have cost without maybe any value. When you're owning a house, you might have an increased cost, but you're also going to have some sort of future value on that because you own it, you can sell it, you can use it and leverage it when the market is in your favor, like we've seen it become for people who, let's say, took the risk of buying in 2020 and the risk of buying in 2021. Or the risk in buying in 22 and 23. Because here's the thing. You look back in the rearview mirror just a couple of years. Can you point at any point in that, or can you point at any month or in any of those years I just mentioned where someone didn't feel like there was risk?
Yeah. No.
There's risk.
Always.
There's going to be a risk in 24. There's going to be a risk in 25. Yeah. The question is, for the cost versus value assessment for yourself, are you willing to take the risk?
Correct.
And that is really what it comes down to. I understand mathematically that there might be some things that are too expensive still. Maybe there's qualification. There's an issue that we can help with when it comes to reducing your debt to income limit or debt to income ratio, paying off some debt, giving you some suggestions, some advice on how you can get qualified. Yeah. You might have to just give up your car payment for a short period of time and do that in order to get that off your credit. I mean, there's things that we can do to help, but I really do believe that owning is going to be the way to go long term because at least you now sit in the driver's seat of what you can do with that place.
So I'm going to be the devil's advocate here. And
please.
logically, everything we say, that's 100% true. But consumers and regular people don't look at it like that.
Of course.
They're going to look at it like, well, the cost of living, the way of life, financial goals, family goals, personal goals, and we see it time and time again. They're going to choose their life over that investment, when in reality, that investment will give you that down the line.
Yeah. And then you also have other people that believe in different investments.
Yeah, 100%.
Right? And so they look at it like, well, wait a minute, if I own and my payment's $4,500, but I'm going to rent for $2,800, that difference, I can apply it into something else where in my business or in my trading or...
But you'd have to do it.
Exactly. It's just like anything, right? So for me, I'm used to putting, hey, I'm on a 30-year fix, I'm paying down principal. And what's cool about it is after the first 13 years, you start seeing that more starts going towards principal versus the interest. Banks always want to get paid first, right? So all the interest, me.
And then you.
And then later it's you. Just like when you buy a car, same thing.
Yeah. Also, though, I want to make sure I mentioned that I think the real gap here, and this isn't really stated in the article, but I know that I hear this, I've seen this, is can you rent in San Diego and also save your down payment at the same time? And then the question becomes, and that becomes,
challenge accepted.
That becomes very challenging because let's say you're renting a 2-bedroom apartment for $3,800 a month or $4,100 a month.
Unreal.
At that monthly payment, at that monthly cost, how much could you be saving every month as well?
Yeah.
You have to have, let's say, discretionary or extra income that you can pay that rent to live there and also save over here so that in 6, 12, 18 months, I don't know how long it's going to take. It really comes down to your income and your monthly expenses.
You know, I'm glad you bring that up because when you're renting every year, the rule is you could actually go up here in California 10%, right?
Correct. Yes,
So
there's a limit.
There's this thing where right now with the way rates are, yes, I believe in this. I agree with them. In some metro cities, yes, it's, renting is going to outweigh buying right now, but long term is the great thing is with rates being the way they are, with time, that rate's going to go down. So therefore, you're going to be saving more money. You know what I mean? Where the rents, and then you can make the decision, do I sell? I have nobody to kick me out. If the seller wants to sell, later down the line, like you got to go find somewhere else. And now that rent is going to cost you more.
Yeah.
So buying payments will go down lower in this day and age. Renting now, moving forward, your rents are going to go up.
Going to be stepping up all the time.
So it's kind of like, I don't know. It's kind of like that thing.
I guess like the only thing that sucks is that you don't have that income to be able to, keep.
That's right.
So it's like, I want to do that, but I still got to pay for everything else. So in a way, you're kind of like, you're effed.
Yeah, I know. And if you have dogs, if you have kids, well then social media kids, right? Go make some money, extra money.
So dumb.
That's the only way to do it nowadays. Like lick my dog and just do some tricks, and then we'll get some money out of that. And now that's a tax deduction. That's a business.
And to really, I guess,
Get out of here.
Oh shit! I'm just gonna go do that. You're right.
Show canceled. Show canceled.
What was I thinking?
I'm always just thinking of ideas just to pivot and move in different directions so that you do set yourself up and your family for success, right?
So the takeaway is figure out a side hustle. Maybe not the one he recommended.
That's it,
But figure out
and then
a
if
side
the dog
hustle.
starts making money, well, now you use that to qualify purposes, right? It's a business.
People in the comments, I don't have a dog. I have a cat.
Great. You start off by going and getting a dog.
Okay, so the charts I wanted to point out really quick because there's a disparity here. There's a big disparity. There's this chart that talks about the average rate on a 30-year fixed monthly mortgage and then the median sales price, and they are going in the opposite direction. So we look at, let's say 1980. I kind of picked a spot on the chart.
Crazy.
I picked 1980, and you look at the median sales price of the home was below $100,000.
Yeah.
But the rate was in the teens. And therefore, that monthly payment was kind of aggregate of that, right? It was proportionate to that.
That's crazy.
You fast forward to 2020, well, you see that rates were at the lowest they've ever been in the last 50 years. And then you see prices spike in 2020. So there is a correlation to this for sure. And the issue is now they are not going in the opposite direction. They're going the same direction. You see home prices going up at the same time that mortgage rates have gone up. And that has
a problem.
Further narrowed. So instead of being kind of opposite but working together, these are the same and working against each other.
Yes. Yeah. That's the
that's-
problem.
that's the
our
biggest issue.
affordability.
Yeah.
Oh, 100%.
That's where it all goes.
Affordability, bye-bye. Affordability, bye-bye.
Incredible.
And I laugh because it's uncomfortable and I don't
And
want
also,
to.
that's the thing. If your affordability is going, right, and a lot of people want to keep their home as an investor, guess what they're going to do to that rent? It's going to be way up there.
Continue going up. Yep. Yeah. Well, unfortunately, first-time home buyers and maybe younger buyers are going to be stuck on the sidelines until they can either overcome some of those monthly payment
I saw that.
objections or just the actual affordability of the approval process itself.
And
on paper, you got to pass the
I
test.
saw that it's higher, right? I saw that last year was 35 years for the first time home buyer to buy their home.
You're talking
on
about
average.
their median age.
That's what I was gonna say when you were saying like, oh yeah, like you could pay that right now, but when you're paying like, let's say $60,000 for just your mortgage payment and you're making $70,000, it's kind of it just doesn't make sense.
You don't qualify.
You're not even
You
going to
don't even
qualify.
qualify.
Yeah.
And then even like I've had people that are making like 110K and they're still kind of like because of their debts that they're carrying as well.
And then, so here's the thing: when we took our NMLS class, right?
oh, don't even get me started on debt to income.
What was the debt to income ratio?
26, like low,
29.
like,
No, it was like 28, 20. There you go. That's how important it was, right? And so, how unrealistic that is. And who sets those rules?
the people that are supposed to lead us.
FHFA, right? Like they're the one that set all these rules. Like that's the norm. It should, bro. In my history of the 17 years being in this industry, I probably had 2 borrowers with that.
Right.
And they had
Never been that way.
very, very high income, I bet.
No, of course.
Yeah.
That's
Well,
So
it's
I'm like,
very
what type of incomes do you have to be able to use
high
that?
income,
But
high
that's the
down
norm.
payment,
Imagine-
low loan amount, low LTV.
So you just mentioned 70,000.
Yeah.
And if it was at 29% of that, what is that, Andy? You're
like
the math.
17 grand.
That's it. So
Around
17.
18,
It's
something like that.
18. Divide
Yeah.
that by 12. That's what they qualify for.
Yeah, it's not
If
going to
we
work.
if we
Nothing.
stuck with that, which
Yeah,
is
that's not going to work. No, not
Assuming
not
no
in San
debt,
Diego.
nothing. Yeah.
Not in San Diego, not right now. I
Yeah.
mean, eventually this goes all the way upstream to general macroeconomic policy
Yeah.
and financial policy with the Fed and the housing agencies and all that stuff. But I mean, I've said it before, every presidential administration wants to see an increase of the percentage of home ownership, and I don't think it's going to prevail this
No,
time.
it's going
I think
down.
It's going to be down for this current 4-year set
Yeah.
of administration. I think it's going to actually have a massive plummet. It's
Well,
going to be a black eye.
There it is, 35 last year, and then 30. A record after 2022 peak 36.
Yeah.
So it just keeps getting worse.
One solution I have been hearing from a lot of young buyers is that they're basically coupling together to then buy
course.
one house and then just pay per room. So I
Yeah.
have one couple right now. It's they're going to be buying a house and then they want to rent out 2-3 rooms. And I'm like, yo, you can't use that rent. But you can, if you get them all and qualify, you guys can. So
Yeah.
they're like, I'd
You can
rather
still do
own
it.
something than be paying individually.
Yeah.
Individually rent. Let's just be together and then sell it in profit.
You can still run the play. You just
Yeah.
can't qualify it that
So
way.
I told them, bring it all in together, see how much you guys have, and then
Yeah.
don't go rent individually, pay more. Like just pay your mortgage and then divide your winnings in a year or 2 years.
No,
and,
right now
it's
I
gonna
get
pay off.
Right now I would get my abuelito, mi abuelita,
Yeah.
Panchito, Francisco.
I
Let's
gotta,
all go in there.
Right
And-
before
and
we
that's,
went to, right before we went to record today, a friend of mine posted that he's got a room for rent in his townhome, $12.99 a month.
Wow.
Yeah, $12.99 a month, all in. Everything else is covered.
That's
but
not
it's one room. It's got an attached bathroom for $1,300.
Where does he live?
Here in Otay Ranch.
Oh,
91913.
maybe I'm gonna look for a
actually have
room.
someone.
No, you're good.
I
You're good.
actually do have someone that's looking for a room.
Okay, cool.
Yeah,
well, we
yeah.
solved your problem right here on the show. I'll
There you
text
go. That's how we are.